Hey friends, it's Simon with Trade and Perform Coaching doing a trade review here on Monday evening, a little bit late. Had to work a little bit extra to get the twins down, so I'm going to try and keep this short and sweet and get to the point. So let's go ahead and jump in. Quickly, just the legal disclaimer real quick. Let me see where I have this. I believe this is it. Bingo. Basically what this says is, guys, the webinar is for educational purposes only. Equities, futures, options. I really don't cover currencies, but they all have large potential rewards, but also large potential risks. Be aware of the risks. Don't trade money you can't afford to lose. The website is neither a solicitation nor an offer to buy or sell equities or futures or options. No representation is being made that any account will or is likely to achieve the profits or losses similar to those discussed in this channel. Past performance is not indicative of future results. Absolutely consult your registered financial advisor, and very important, have a risk trading plan before ever investing or trading any financial instrument. Follow your stop losses, guys. The most important thing. Don't violate your own stop loss rules. So it's late. I want to be very specific. Coming in on the day, we had an issue. We obviously had a horrendous trend day down on Friday in NQ. It was just ugly day down. It continued overnight. We opened up on NQ down 50, which immediately caused concerns. Hadn't penetrated the prior day's low, but then we immediately had essentially an open drive lower and got below the 56.69 low from Friday, and that caused concerns. Now, why did that cause concerns? Well, this rollover dragged ES down, and it's really weird from a trading perspective. You know, most of the time you assume that there's some matchup between the markets, and there's just been none between NQ and ES. And so if we look at ES, right, so first of all, the NQ caused a bit of caution out of the gate, and that's fine. There's nothing wrong with that. I didn't go long or short out of the gate, and that's the first thing I really want to talk about. My trade plan called for me not to trade the first 45 minutes. It's Monday. We had what could only be described as an ugly day on Friday, and that caution can be frustrating, right? Now, there's two ways to look at that. I could have been very aggressive off the open because obviously somebody was, right? And I look at it a couple ways. I look at what the market actually did. What did my support resistance zones do? And then how did I actually read the market as the day was going through? Those are the three kind of pillars of what I'm going to look at to see, well, how do I make a decision? So the first thing that was frustrating, the zones were very well placed. Okay, if you look, first touch, I'm just going to mark them off. First touch into the zones created great counter location, despite the fact that NQ was melting, right? We opened up, we pushed down to 24.23, pushed straight up into 24.27.25, where we rejected. Again, these zones were posted the evening before on Sunday, came back into the 23.21 zone. This is all in the first 15 minutes, right? We continue then to test Globex low. That wasn't a trade location for us today. This was the one that really hurt, the 24.17 to 24.15. It was a great rotation down. It was a challenge because if we look over here on NQ, again, we had diverging markets. This is the banking index out of the gate. You can see that we gapped up. And this 92.81 on the BKX index was the swing low from Friday afternoon. And we clearly gapped above and were holding above in the first hour. Additionally, the tick was really confusing. What the tick tells us is what the broader market is doing on the New York Stock Exchange versus the S&P 500. And you can see the S&P 500 got quite weak, but the broader market never got weak. And then when we finally pushed down, it pushed us right down into key support. So I had a challenge here, and I want to talk about that challenge for a second. When you have a trade plan, and Dr. Steenbarger will talk about this a lot, and all great trading psychologists, including my own trading coach, Dr. Baldridge, talks about all the time, which is if you come in and you say, hey, I'm not trading for the first 45 minutes, right? One of the prime objectives, the reason why I do the homework in the evening, I get up in the morning, review my zones, make sure that I have them well placed, go through what my trade plan is because what I'm trying to do is maintain a trust in my own decision-making process and then not violate that your own inner trust. I don't have another way of describing it besides an inner trust. It's the ability to trust yourself that you'll follow your stop losses, that you'll follow your entry plans, that you won't violate your trade, right? Because once you get into violating your trade plan and your self-trust, fear dominates the trader's mind, and it's very, very difficult to overcome and can just be very painful, is all I can say. It can cause a lot of pain, it can cause a lot of losses in dollars. And remember, the entire objective of me running the room is to help traders move from being boom-bust traders to being consistent traders. And part of being a consistent trader is being true to your trade plan. So I really wanted this location. I did mention the rooms for my traders that are more aggressive that this was a key location. If you were very aggressive, you could take this location. It turned out to be the low of the day. Unfortunately, I didn't get it. It hit at 9:05 a.m. and I just simply wasn't prepared to take a trade till really 9:15 to 9:30 time frame, right? So we come in and you'll notice that we're below the prior day's low on NQ. We then push, we attempt to trap back above Friday's low, push back below again, right? So this PA is really tricky on NQ, and it's really starting to look like a retread of Friday's price action. And again, the same caution when NQ hit lows on Friday that kept me safe in ES today kind of came back and bit me a little bit with being a little overcautious today, but I'm all right with that. The other thing that kept me cautious was how the domes looked, and I'm going to pull these over to show you what I'm talking about. These are the futures trading domes. They're very common. I think everyone uses them now. But see how we have 151 by 133 right now in ES? Normally, you would see during the day session where you're actually at the bid, not even the depth of the market, but just actually at the bid ask. You'd see 3, 4, 5, 600 contracts at the bid and ask. We were seeing 15, 20, 30 on the bid and ask today. Just very, very, very unusual to see the dome so thin, and that was kind of my second point of caution for the day, with NQ being below Friday's low. And so we then pushed, right? And at any rate, what that managed to do is both keep me out of the short side trades and the long side trades because I was concerned of a retread. So the reason why I'm mentioning this is that's frustrating as a trader, right? And how do you deal with that? Do you get frustrated that you had the right area, you had the right trade set up? Do you get mad and you react and you go, well, I'm just going to go force a trade someplace else? Or do you just get real peaceful with the idea that, hey, I had a plan, I followed that plan. That plan makes me money almost every day, on average at least 1 to 2 trades a day, right? Do I have to go and press today because my plan kept me out of the market at a key location? And then it had quite the large rotation up, right? Really, we came from 1750, which is the top of that zone, all the way back to 26. The key there is to stay within yourself as a trader and to stay within your trade plan and go, okay, I know exactly where I'm looking to find my next trade, right? And I said the key location here was the backside test of the opening print, and that's exactly where we came. We came a little bit over. And then I had pointed out what was interesting here. So to finish my thought, right? The answer is no, you don't chase, you don't force, you get really quiet internally, you just relax, and you know that the market will set you up with another trade. I promise you, I've coached traders for a long, long time. I've yet failed. You can never miss a trade because there's always another trade coming. And at the end of the day, that's a hard message to get across. But once you do get it across to your traders and you let them know, hey, there will be another setup, there will be another trade, right? You stop the chasing, you stop the frantic behavior in your head, and that behavior, that franticness, FT71, which refers to it as the monkey in your back, reflects in the number of trades you take and how frantically you come in and out. There's nothing wrong with trading. There's nothing wrong with trading a lot, right? Just most people can't do it successfully. You want to make sure that you're hitting your marks and you understand that your trade plan suits your personality and your ability to process emotionally and mentally. Now, I can tell you tonight's going to be a highlight of where I made my trading errors, not where I made my great trading decisions. We then pushed up to the backside test of the opening print. And what you'll notice here is really odd behavior. Look how the broader market fell off. This is the tick, right? Tick actually went down as the market went up. Normally we would refer to this as tick divergence. This is massive tick divergence. And we had off the TPO chart a key area up in here, and I noticed it about 5 minutes late. By the time I recognized that there was, this is not normal price action today. That's all I can say. The dome was odd. The price action on the tick was odd. And I recognized that we had a potential short up here. I just simply didn't pull the trigger quick enough. I wanted it above 24.50 if I was going to take it. So I was going to have to allow for a push up into perhaps Globex high or Friday's volume point of control. So again, I did nothing. And again, I can tell you internally, I struggled and had to keep coming back to there's always another trade. I don't have to chase my trades down, even though it would have worked, right? Don't have to chase my trades down and relax. Sure enough, we then got the opposite price action, right? As the broader market improved, the NYSE the S&P 500 rolled all the way down as the broader market improved. Again, if you were using this as a measure, as I do most days, this really trampled you. I did nothing here. I can just tell you we came for a backside test of Globex low. There was a 50-60 back here that worked for 2 points, and some of the members in the room did take that trade to the long side. I did not. Again, I just didn't have a handle on the day, and I was going to let it go. But the one place I did get a good read here was we finally rolled all the way back to almost retesting this 24.1750 zone and what I was really hoping for. So my best hope for a good trade today was going to be in this support zone down here, that either a retest of Friday's low, or really where I wanted it was in this 24.12 to 24.10. That's really where the support is sitting. They front ran it a little bit at the low. We were so far stretched on Friday afternoon, and we just never got it. But you'll notice that I highlighted this tick here. We actually got the low tick of the day. And this was after we had already rolled down almost to test the low of the day, had pushed back above Globex low right here, and then had come and we pressed really hard on tick and were unable to get back above Globex low. I highlighted this. I mentioned to members in the room that at that point, both NQ and I drew all these arrows. I believe these are at the same time. I said if we can get back above, so this is at 1330, the same time, and then you can see where I put all these arrows. And I said for NQ, a backside test of the opening print, that 56.98 would probably generate responsive buyers as long as it could hold above 56.98. NQ was hard, right? They really did a lot of shaking and baking at that support area. But ultimately, it obviously pushed all the way to the high close up at 57.20. And then, again, that low tick of the day with an inability to press back below, that was the only time that I saw the broader market aligned with what the S&P 500 was doing. I saw the trade. It was already 1:30 in the day, and I really had to spend the majority of my day managing my emotions. Because I was really frustrated from not having a trade all day long and seeing really what turned out to be really nice rotations for a Monday, and I just didn't convert today. And some days that happens, and you just, you got to look to your trade plan, you got to look to your belief in yourself and your process, and you'll see professional teams talk about that all the time. I buy into my own process. You'll see team members in football all the time. We buy into the process, we repeat the process, we know the process will end up yielding profitable trades. I've done that. I was just tired at this point of the day, and I surrendered. I had exactly the right call. And in my notes and my homework, what I would have said again was if I could have just been at a bit more peace with the difficulty I was having in the morning, I probably would have taken this trade again. It was challenging in an environment where NQ's ripping up and down. This was a hard trade to take where you had a rotation from 22 to 20, and the setup was there. I just didn't execute it, and it was the right call. Oh, but there was a positive side to that. I want to mention that, right? And I said, and you've seen me, if you follow me in the Twitter account or the StockTwits account, I said, don't short the low of days. And I said, at this point, when we got to about this point right here, I said the market's now had plenty of times to build up shorts at the low or near the low of the day, right? And then there was another key point here, and I'm just going to touch on this really quick, and this is the 24-hour TPO. I use both volume profile and TPO to come up with the support resistance areas. But the last thing, if I'll steal this off the other screen, you can see that we had a shift in value lower. We have a double distribution here, and you can see this evening we almost came into the top of this. It's not a volume node, it's a time node, but this high time node, it was 2475. My key location is to hold this 21 to 2475 area. Tomorrow for a push up, either overnight, so we're either going to probably push up into that 3134 or push down into that 2478, 21. Either way, I'm good with a trade on either side of that. I wasn't short at the end of the day. I didn't let the fatigue or the tiredness break my discipline, which is don't short the last hour of the day. The reason why we don't short the last hour of the day is you end up with run-ups like this. And currently in the Asian session, we've traded up to 2430. And on NASDAQ, we've extended up another 13 points to 5731, which makes a lot of sense. The last thing I want to leave people with is when you look at this volume profile, and that's CL there, so let me change it real quick. When you look at this volume profile, let's first start with NQ because everyone's so terribly bearish on it, right? I want to point out we have broken the long-term uptrend on NQ, but look, here's the deal. This is where we were on the 20th of last month, right here, okay? Unless we get below that 5600 and hold below 5600. So there's a key. If you look at breakdowns on NASDAQ, and I think I can bring up enough data to find the last breakdown, and it's been a while, right? But we can call this, right? Someone could have looked at this right here and said, oh my, we're breaking down. If you look, we gapped down, drove all the way down, closed at the low. The very next day, we reversed back in. You can see again here we had a series of days where we just closed at the low 3 days in a row. We broke below the last swing low. This was really a period of days where it was ugly, right? Look, so that's the beginning of November. By the beginning of December, we're back at highs, right? There was no fundamental change that I know of. There's no corporation that missed earnings. We haven't had a series of missed earnings. I haven't heard of any fundamental blow up anywhere outside of the retail sector. Right, so usually there's a driver. Otherwise, we end up with very brief periods of down days, and this may be the beginning of a brief period of down days, right? But the other thing I want to point out, if you'll look, is of this whole down move. Look how few days. Look at the ranges this covered every day. Shorting at the low of the day, we had a few closes at the low, but the NASDAQ overall, if you look, very few closes as you go through here at the low of the day, even in rotations down, right? One day it closes below, the next day we close up in the mid, low, high. There's very few closes where we just consistently close at the low. And again, the reason I'm pulling this up is because we've had dramatic breakdowns in the NASDAQ before, right? And only to have them viciously reverse and push back up. I'd be very cautious there. I also want to give a quick sneak peek over to ES on the daytime frame. And as we pull this in, you're going to see there's just very little, there's no damage. I mean, here we can just suck this thing all the way back in, pull it in so everyone can see it. And this is the volume profile, and you can see at this point, all we've done is backside tested the breakout area and support. We clearly held. We failed to trade below the low. That would be right now my big, a close below that 2412 would be an alert. But then again, really even below 2412, you then have the challenge of getting below 2403 on ES. There's simply no damage in the S&P 500. Now, maybe it's coming, and that's the last piece I want to leave y'all with this evening. As a day trader, you should not be in my humble opinion, in the business of prognostication. It doesn't matter. What you should be in the business of recognizing is when value is shifted up or down, right? I want you to, at least if I was coaching you, I'd want you to be aware of what do the different pieces of the market look like when your setups are setting up. How big is the stretch? Is there tick divergence? Is the market in alignment with NASDAQ or out of alignment with NASDAQ? Are you having volume spikes? Are you at a key volume profile location? or are you at a key TPO location? Have you broken if we're pushing down, right? Much as today, you'll see if we're pushing lower like this, and then we've come back and broken the last swing high and we push back for a 50-60 back. Have we broken a series of swing highs or swing lows? As a trading coach, when I'm coaching someone one-on-one or when I'm working in the room, I want people to be cognizant of what the structure looks like of markets that move up and the structure looks like of markets that move down and how they relate to one another. And given that takes a little bit of time to learn, that's not an overnight thing, but that's away from prognostication of I think the market is bearish, or I think the NASDAQ is bearish, or I think it's bullish, because in both down markets and in up markets, if you'll look here on ES, let me erase this real quick and drag this over. If you'll look, when we have periods of down markets, right, this was brief period of down, right, and you can see when we went down, look how few days these arrows indicate where the market closed. And look on down markets, look how few of them actually close anywhere close to the low of the day. And this is a market that moved down. Like this day closed at the low, this one didn't, this did, this one didn't, this one didn't, this one didn't, this one didn't. I mean, almost through this entire push lower where we moved from 2390 all the way to 2320, right? There was just a handful of days that closed at the low of the day. The majority of the time when we're working in the room, what we're looking for is the U-turn, right? The U-turn is key to making money in ES. Anyone who's bet on the bearishness of the S&P 500 or the NASDAQ in the past 5 years has just been wrong, right? So don't buy the hype. Stay within yourself as a trader. Meditate. Keep your mind calm and focused. Follow your trade plan. If your trading needs adjustment, the adjustment needs to come within the trade plan, right? And pride yourself on the discipline that you use to execute your trade plan. Anyways, I think that's about as much as I can share tonight. I'm tired, and I'm going to go home. So have a wonderful evening, guys. Trade well. Have a written trade plan. Respect your stops, right? And let the market come to you. My name is Simon. I'm a Trade and Perform Coaching. By the way, if anyone would like to come and visit our room for 5 days, email me at tradeandperform@gmail.com, and I will be happy to extend you a visitor's pass. I hope everyone has a great night. We'll talk to you soon.